Happy Hump Day, everybody. The Ted and Bob Show, or the Bob and Ted Show. Ted's back there hanging out. He's been giving me a lot of very helpful information today. Matter of fact, he started talking to me about what happens for the seller once they sell the business with the proceeds. They go to the closing table, they get this nice check for whatever we were able to sell the business for. And now what happens with that money? So as always, and in most things in our life, the IRS wants to get their fair share. And the distribution of the tax implication, lots of big words here, is unbelievable. So there is this phrase that we use, it's called asset price allocation. Because in the sale of your business, we break it up into different segments that are taxed differently. So I'm going to use my little cheat sheet here. So if I'm not looking straight at you, you know why. So if there's inventory to the business, that's going to be taxed at an ordinary income tax level. So whatever your ordinary income tax level is, if you're selling off inventory, and that's if it's sold at the cost, not if you're making money on it, then it's taxed at an ordinary tax income. But then you take something like a liquor license, a 4COP license or 3 CPS license, and that's going to have capital gains tax on it, which hopefully will be lower than your ordinary income tax. Goodwill, going concern value, other intangible assets, and the key word there was goodwill. That's going to be taxed at capital gains rate. Buildings, lands, ordinary income, non-competing agreement, ordinary income, training, consultation, ordinary income. So as you can see, there are several different categories that we break the sale up into. We have the assets, which are the furniture, fixtures, and equipment. We have the inventory. We have a non-compete agreement. We have a training agreement. If we have a license like the beer liquor license, that's another piece to the puzzle. So I guess the long story short here is that besides me, your business professional that's going to help you negotiate the deal and get the deal to the closing table, you're going to need the assistance of your CPA. And you probably want to have that conversation sooner than later with the CPA, because you don't want any surprises when the day of closing comes and you're getting, a few $100,000 and the IRS wants to take their portion to it. And usually the closing attorney is making us fill out a document that is stating exactly what each of those categories are being transferred at what amount, so that the buyer and seller are sending the same information to the IRS. So that's my little tips and tricks for today. Wish it was more exciting for those that are coming near that time to sell their business. Hopefully it was helpful. You guys have a great day, and we'll talk to you soon.